Hello. Before we begin today's video, I want to take a little bit of a peek at what our portfolio has been doing, the one I compiled about a couple of months ago. It's up about 12.5% after the recent bull market, I suppose. Now, hopefully this will continue, but of course, in the market, in the long run, you're going to be having bullish and bearish phases. But the thing is, I did make a video and I did point out to quite a few companies that I would be choosing in my portfolio. Actually, over here, you can kind of see what I have bought and what it has been doing. But I have made a dedicated video and I will be linking this video at the end of this one. And it will also be a link in the description in case you are interested in watching that one and see more details. But in this one, I'm going to be talking about some stocks that I would be buying right now, like regardless of what the stock market is doing, based on their valuation. And so there are going to be 5, and I'm starting with Alibaba. Now, a lot of people are scared of Alibaba, and understandably so. It has been going down a lot. There have been the issues with crackdowns, the issues with China, the US, COVID, and everything. Yet recently, in the past, let's just say a month over here, you'll see that the company is down significantly from like 63. Right now, it's sitting at 81. So that's a pretty significant increase over here, like 30% or something. Now, the thing that I love about this company is the valuation. Yes, the PE ratio has been going a little bit higher, but that is because of the the last year basically, where net income was down because of the crackdowns, because of the lockdowns in the Chinese economy, because of COVID and everything. But in terms of what the company has been doing over the years, and in terms of the free cash flow that they are generating, they are doing better and better. And as this company's valuation drops tremendously, this is when I am accumulating, and this is where I would definitely accumulate more. And Alibaba is one of my core holdings in my personal portfolio for a lot of things. For example, the revenue growth has been, generally speaking, growing at a tremendous pace. The free cash flow has been growing. The total equity has been growing. Generally speaking, the coffers of the company are full and things are looking pretty nice. Little debt over here. Now, the margins have come down a little bit, actually significantly, again, because of the last year. But we don't expect this, we don't anticipate that this will continue. In fact, I'm expecting that Alibaba will actually flourish in the next few years or so. This is why this is going to be one of my core holdings. And I have a little bit of a stock evaluation tool analysis over here, pre-made for you. And of course, you can get all this and do it with every stock, with any stock that you like, using our tool here. By becoming a Patreon, you can find a link in the description box below this video if you are interested in doing that. But in this case, you are looking at a revenue growth of 8, 10, and 12% being my assumptions over here, my low, medium, and high ones, and a net income margin that is approaching what the company has been doing. Again, this last year is the odd one out. We shouldn't take this too much into account. But overall, the company has been doing 18, 19, and 20, and the free cash flow margins of 80, 90, and 100. And you are getting a low price to pay today of $136, while the current price is sitting at 82 right now after the market opens. It's a little bit higher today. And medium one is at 175 and higher to 120. So this is a stock that I could easily see being near $200, and I think it will eventually get there. It may take a little bit of time, but I think for a long-term hold, this is a fantastic one to own. Now, in terms of the next one, Meta is another one that is a little bit of a diverse play. Some people would hate it. It's been down a lot, significantly. But this is when I'm buying. And I'm buying this one because the valuations are insanely low. This basically trades at a multiple that is something near your nearest supermarket. They are trading at a multiple of like 7 and 8. At some point, it was even lower, which is insane to me, frankly. The company has no debt. The company is increasing its top and bottom lines tremendously over here. Pretty awesome margins as well, returns on equity and everything. Looking fantastic overall. And it's only the stock price that has been suppressed, and because of the spending, the operating expenses of the company are still pretty high, and that's a big deal. And this is why the stock has actually dropped so much, because of the metaverse experiment. Now, regardless of what the metaverse is going to be doing, I'm not a big fan of it personally. I still think the company will eventually head back to its 1 trillion market cap. I'm pretty sure about this one. Eventually, it may take a couple of years, may take a little bit more, who knows. But this is a company that has a lot of value in the advertising space. So regardless of what they're doing with the metaverse, I still think they're going to be flying. The next one is going to be, actually, no, I forgot to tell you about the valuation here. I'm using a revenue growth of 10, 12, and 14 here for Meta, and net income margins of lower than what the company has been doing, as you'll see. And you will see that the projection results that I'm getting are at least $200 over here with the current price at 117, which I think is insane, frankly. And the high is 330. I think this is a stock that is at least a $250 stock normally. But again, this has been suppressed a lot because the company has been overspending in the metaverse. For the most part, that's the big reason, really. And of course, a little bit of a slowdown in the advertising space, but this is happening in the economy overall right now. Next company is going to be Alphabet, and you may be thinking that I'm buying a lot of tech over here, but I'm not looking to be diversifying for the sake of diversification. I want to be diversifying, owning good companies and companies that will actually make a lot of money for me, not necessarily picking a company from the food space, for example. I just want to get the ones that are suppressed and are great value. And this is why you're looking at Alphabet over here, another company that is not super cheap, but cheap enough for me to want to get it to my portfolio because it's growing tremendously as well. And buying back shares, and they will be buying even more in the future. And also, as you'll see here, tremendous margins and tremendous return on equity. And if you take a look at the valuation over here with the values that I have used in terms of the projections, 10, 12, and 14, the company has been doing significantly more, frankly. And net income margins of 26, 27, 28. I also suppressed this compared to what the company has been doing in the past year. You will see that our low estimates are sitting at 83, which would be amazing to get because the stock price went near that, I believe. And right now it's sitting at 98, and the medium one is sitting at 106, and the high one at 132. But remember, it's always better to pay a little bit more for a great company than pay too little for a company that's kind of average. So I'm definitely a buyer over here in terms of Google. And in fact, I have already bought Google myself at an even higher price, just because I think that the overall value of this company is amazing. So at this price, I'm definitely a buyer. Next one is going to be Intel. Another suppressed company. I love these guys because when these companies get suppressed, they give us amazing valuations. And yeah, they can have a bad quarter, a couple of bad quarters, even a bad year because of what has been happening in the markets. But remember, over here, we're getting the CHIPS Act. So we're getting a little bit of a preference in terms of Intel here from the government itself. And so the company has been buying back shares, which makes a ton of sense, and I think they will continue doing so because of the valuations over here, especially if they start making even more money. It's not a high growth company. We know that it's a behemoth. You can kind of see it over here that it's sitting at like 80 billion in terms of revenue. So there's not much room to grow, but the thing is, it's paying a very nice dividend over here, almost 5%, which is rather safe as well. And this is a nice and a very, very nice extra, because if you consider the risk that you have from this company because it has been suppressed, you may get that mitigated by getting some extra interest, getting some extra income from the dividends over here. And 5% a year means that in 10 years' time, if you hold this company, you're basically getting half your investment back plus the gains that the company will be having based on their valuation. And if you take a look at the 5 years chart, their valuation has been suppressed tremendously. It's sitting at the lowest over here, and even lower at some point at 24 almost. So it's insane, this kind of valuation for Intel, I think, and it's definitely a buy for me. You can kind of see it as well over here in the metrics tool that I'm using, like revenue growth of 1, 2, and 3% for the next 5 years, and margins that are similar to what the company has been doing, and the free cash flow margins as well. And you will see that the projections that I'm getting are significantly higher than the current price. So I wouldn't be surprised to be looking at this company being at $50, for example, like 5 years from now, who knows. I wouldn't be surprised at all if it's even more, frankly. And so I think that buying it today is a fantastic proposition, to tell you the truth. And this is why this is going to be the fourth one that I'm picking in this video. And the final one that I'm going to be picking is HP. A company that is super suppressed in terms of valuation, and I love these guys. And you will see the 5 years chart over here for the company. You are looking at it. It's not moving a lot. It's sitting at like 20, 35 over here and 40. So it's kind of sitting at a range. When companies sit at a range for a long time, they could have a pretty significant increase at some point, when they are kind of, accumulating more and more buyers and sellers at a specific range, sort of. Then, you kind of get a breakout at some point. It did happen here, and then it went back down. But the thing is, and the most important thing here that I like about this company is the valuations. Take a look at this one, like a 5 P and a price to free cash flow of also 5, converging. meaning that the company is actually pretty much converting their net income to free cash flow. I love this thing. And the thing is, this multiple over here is the multiple that you can buy your next door shop. And so this is a very, very low multiple over here. Amazon businesses, Amazon seller businesses, sometimes trade for higher multiples, which is insane, frankly. And so this company has been buying back shares like crazy, mad maniacs. Another thing that I love. So becoming even more valuable, more and more valuable. So I really, really like this company for holding for the long run. And it's a company that's also pretty much been doing fantastically in terms of their dividend that they're paying. Because take a look at this payout. It's a very, very safe dividend of like 3% over here. Fantastic, frankly. And there have been some short-term headwinds, and you could see maybe the price going down a little bit more, potentially, maybe. But again, for holding for the long run, I think this is a really, really good company to be holding and pretty much have it there in your portfolio and accumulate the dividends till it gets significantly higher. And if you take a look at the valuation here, you will see that with a very, very measly revenue growth of 2, 3, and 4% over here, we're looking at a low of 48, 65 as a medium, and 86 as a high, with the current price being at 30. So we're very, very far off from even our medium estimates over here. It's more than double. So this is why I like this company a lot as well, and this is why I would definitely add it to my top stocks right now. There are many more. I could potentially make another video easily, actually, with even 10 more stocks that I really, really like right now. But again, you can take a look at my other video in which I compiled a portfolio, a 100K portfolio. I'm linking to that right now, so click on that and take a watch. And I will potentially be making another video if you enjoyed this one about more stocks that I prefer for today, that I would buy today. And I'll see you in the very next one. Bye-bye.